It's interest rate week in Canada, with the Bank of Canada expected to raise interest rates on Wednesday. And on that note, Myers Norris Penny and Ipsos surveyed Canadians, and 35% believe that rising interest rates could lead to bankruptcy. The definitive guide on how to manage your credit, product, penalty, price in that order. It's never been more important to get your mortgage right. All right, welcome back. This week is interest rate week. We are going to cover interest rates pretty much every day. We're going to talk about the Ukraine. We're going to talk about the Bank of Canada. We're going to talk about interest rates in our March interest rate update. You're going to get all the information you need this week with respect to interest rates, variable versus fixed, all of that stuff. So stay tuned for the rest of the week. And if you want to make sure that you don't miss a video, go ahead and click that subscribe button and that notification bell so you'll get all the information as it comes out. It's going to be a big week from the perspective of interest rates. Obviously, massive amounts of uncertainty in the Ukraine. We're going to cover that. We're going to talk about it in another video. We're also going to talk about what the Bank of Canada's decision is on Wednesday, have a little bit of conversation about the Federal Reserve and so on and so forth. And because it's interest rate week, we are putting our Secrets to Getting the Lowest Interest Rate course on sale for the first time at $47. Yes, that is the cheapest that it's ever been by a long shot. And it's only going to last until the end of the week. It will be on sale until March 7th. If you don't get it by then, you won't be able to get it. So go ahead, go to ratesecrets.ca if you're in the market for a mortgage and get all of the information that you need in order to save a ton of money on your mortgage and to also get a really great offer from Mortgage 360. So let's get into it. Let's discuss what's going on in the world of interest rates this week. And more specifically, let's discuss the article that came out from Daily Hive. Now, several other news outlets covered this story, but Daily Hive did it really well with a really great headline. And my buddy Steve Koresh, who's out in Surrey, BC, who also has a YouTube channel, go ahead and check it out. Really good. He put out a video on this last week, gave me the hat tip, said, hey, Nolan, you got to do a video on this. So, full props to him for pointing it out to me. He's got a video on this exact same story as well that has like 45,000 views as of filming of this. So go and check his conversation about it out as well. For me, I'm going to dig a little bit deeper. I'm going to go into the actual Myers Norris Penny article and the research study that was done, because it isn't just the headline of 35% of Canadians expect that they'll go into bankruptcy if interest rates go up. No, there's significantly more to that story than that. So I'm going to jump you in here real quick. First and foremost, let you take a look at the headline. This is the Daily Hive coverage of the story. 35% of Canadians say rising interest rates could push them to bankruptcy, and goes in and talks quite significantly about this exact issue. Now, this was a study done by Ipsos on behalf of Myers Norris Penny, specifically Myers Norris Penny's bankruptcy division. And, when you go and you take a look at the actual study here, the actual study has significantly more points than just 35% of Canadians are going to risk bankruptcy. Now, obviously, rising interest rates is a concern for a lot of Canadians. That's why a little bit later on in the video, I'm going to show you exactly what increases in interest rates would mean from a mortgage perspective. But this is the headline, and this is the numbers. I'm going to increase the size of these a little bit here and show you the other points other than just the fact that 35% of people are concerned. So first and foremost, half of the people surveyed said they would be in financial trouble if interest rates rose. 35% say rising rates could move them towards bankruptcy. Now, the second point is nearly half, 47% of people believe that feeding their family has already become less affordable. That's absolutely true. We've obviously seen inflation in the grocery aisle. 1/4 say that they do not have a solid understanding of how interest rates impact their financial situation. That's why I'm going to show you how much an increase in interest rates would affect your payment. And then 8 in 10, or 81%, say that with interest rates rising, they will be more careful with how they spend their money. And that's a really good thing. So there's a whole bunch of things to note here and to unpack with respect to the study. The first and foremost is you have to understand that this is the division of Myers Norris Penny that deals with personal bankruptcy. So when you have an organization that does a study on financial distress, you're probably going to get some results that indicate that financial distress could be a problem. Now, obviously, they're putting out this sort of report and they were trying to get it out in the press to get some publicity so that when inevitably people end up in a financial situation where they can't make their payments, well, they will be the people that they go to in order to get their bankruptcy consulting services. So, this is interesting. Obviously, you have to really pay attention to where you get your news and where you get your data and where you get everything, because everything that comes out almost always has some sort of a spin on it, right? Like, take this channel, for example. This is a mortgage channel, so there's always a little bit of a mortgage spin to it. Well, this is no different with Myers Norris Penny putting out an article about bankruptcy and debt when they're in the business of dealing with bankruptcy, debt, and consumer proposals, and so on and so forth. Well, guess what? They are probably going to put out information on exactly those things, and that's going to be the headlines. So, really interesting here. I don't think that if interest rates rise, 35% of people are going to be at risk of bankruptcy. I just don't think it makes any sense. First and foremost, you've got a significant proportion of debt in Canada that is in fixed rates, whether that is in a credit card that has maybe a 10 or a 20% interest rate, whether it's in a car loan that has a fixed interest rate, or whether it's in mortgages that have 5-year fixed rates. And I would say that a pretty large percentage of debt in Canada is fixed rates. So rising interest rates is probably not going to lead to bankruptcy for the majority of people who have those types of rates. Now, rising interest rates could affect people who have revolving credit with variable rate interest. So things like line of credits, things like mortgages that are variable rates, and things like home equity lines of credit. Those things will definitely have an increase in the payment amounts. Now, the thing you have to keep in mind, especially on the side of things with respect to mortgages and home equity lines of credit, is people have been qualifying for those mortgages and those products at significantly higher rates than what they're actually paying. And they've also been paying significantly lower rates for the last couple of years as they've taken advantage of the low interest rates. So those people are probably in a pretty good position from the perspective of they've had really low payments. Now, that's not to say that they shouldn't be wary of the fact that interest rates are going up and that they shouldn't be paying attention and adjusting their finances accordingly, but they have some bandwidth with respect to the amount that interest rates could go up before they're going to feel a significant amount of pain. Now, the big question here is, what would an interest rate increase look like for the majority of people? So we've got our handy mortgage calculator, My Mortgage Toolbox here, that you can download. Links in the description below. I think we've had several thousand people download this application already. And the best thing that you could do is go in here, use the simple mortgage calculator, and determine what your interest rate differences would be if you were to have an interest rate increase. Now, don't just do this if you're a variable rate borrower, but also do this if you are a fixed rate borrower so that you can see what your payment increase would look like when it comes time for your mortgage to come up for renewal, and play with it. Add 1%, add 2%, add 3%, so that you can figure out what an interest rate increase would look like in your personal financial scenario. So I'll jump you in here real quick and we'll take a look at this. So we've started off and we're going to do this in $100,000 increments. So it's really simple. If you have a $500,000 mortgage, you just multiply all the numbers by 5, or you go and you download the app and you do it yourself. But we're going to figure out what the difference in payments would be per X amount of interest rate increases for $100,000. So starting at $100,000, we put 1.5% in here, assuming that somebody has a variable rate. Now, obviously, a lot of people got better rates than this. Some people have worse rates than this, but this is just an example to show you how much an interest rate increase would affect you. So we start off and we have about a $400 payment if we've got a 1.5% rate. Now, let's say interest rates were to go up about 0.5% to 2%. Well, it's about $25 for every $100,000 increase in payments. So if you've got a $500,000 mortgage, you're looking at about $125 more per month, or a pretty insignificant amount from the perspective of how much you spend on coffee or beer or excess things that you don't necessarily need to purchase in a month. Now, what happens if we add another percent? So now we're going to the point where we're increasing our interest rates by 1.5%. Well, it's about another $75 per $100,000 in mortgage. So if you're looking at a $500,000 mortgage, you're looking at about an extra $450 a month with basically 6 interest rate increases. So still not that bad in the grand scheme of things. And for the most part, a 1.5% increase in interest rates is about the furthest out that people are forecasting right now. So you can expect that that's probably the most you're going to see in interest rate increases in the next couple of years. And keep in mind that this is a doubling of interest rates. So if interest rates essentially double, so the interest rate you're paying essentially doubles, you're not actually getting double the payment. You're only increasing your payment by about, in this case, 20%. So, and it's just under 20%. So you don't have to worry about a doubling of interest rates being a doubling of mortgage payments. In fact, even if you were to go up to 5%, which is where most people have been qualifying for mortgages over the last couple of years, well, you only get about $184 per week increase in payments, which is not even close to a doubling of payments. Now, does that mean you're going to have a pretty significant increase in payments, especially if you have something like a $500,000 mortgage? Well, yeah, your payment amount is going to go up by about $1,000. But if you look at the numbers here again and you say, okay, let's say I had that $500,000 mortgage to begin with. I was paying $1,999 to begin with, and I'm going to increase my payments by about $1,000 or just under $1,000. Well, I'm going to pay $3,000 instead of $2,000. The good news is you are qualified for that to begin with, and at the end of the day, you can probably afford it, assuming you haven't taken on a whole bunch of other debt. Now, the big thing here is if you want to make sure that you're going to be set up for rising interest rates, and let's assume they do go up a ton because inflation runs wild and the things that are happening in the Ukraine and Russia end up having a even greater effect on inflation, and we end up having to see interest rates go up quite substantially. Well, the best thing you can do to set yourself up to make sure that you aren't affected is to do things like get rid of your consumer debt and your non-mortgage debt. That means getting rid of credit cards, lines of credit, car loans, doing everything you can to minimize your costs. And if you want to be proactive and you want to make sure that you are in a really, really, really good place when interest rates do start to go up, just make sure that all of your other debt goes away. And if you can do that, you should be more than well enough prepared for rising interest rates. And whether or not you think that 35% of people are going to actually have to declare bankruptcy, well, if they think that their interest rates are going to double and that means their payments are going to double, the good news is that they're probably expecting higher payments than what they're actually going to be. And they don't actually have to worry as much as Myers-Norris Penny is suggesting that they should have to worry if interest rates were to go up. And that's the big thing about polls and research and so on and so forth. It's really easy to get the wrong answers to a question. I have a sneaking suspicion that if Myers-Norris Penny went back and interviewed a whole different set of people and said, hey, if interest rates went up by 1%, here's the effect it would have on you, or they went up by 2%, here's the effect that it would have on you. I have a feeling that a significant amount of people would change their answers with respect to how they responded on this survey. So you got to watch data, you got to watch questions, you always got to watch sources of information. And ultimately, do that whether you're watching me, whether you're looking at Myers-Norris Penny, whether you're watching Steve Koresh in Surrey, or anybody else for that matter. Make sure you're always looking at the data and trying to figure out what the motivations of the people who are publishing that data are. So if you found this video useful, and I sincerely hope you did, and you want to see all the videos for Interest Rate Week here on the Mortgage 360 channel and the Nolan Matthias channel, go ahead, click that subscribe button, click that notification bell. Please hit that like button so more people like you can see this video. And don't forget, we do have that race to 25,000 subscribers still happening. So if you do subscribe, there's a chance you could win some money.